Come on. Somebody knows it. Meta. I think yeah, next one is meta. Meta. Right? Meta. Right? Ooh, that is an ugly shirt, ain't it? Meta. Meta platforms. All right. You guys confirm that? Yeah, meta. Thanks, Ryan. All right. So right away, you can see that this is a heart attack for efficient delivery and price action. And this is one of the things I learned when I was trading Globex as a commodity trader. And Globex would be very, very spotty. And spotty is like this, where there's a whole lot of areas where there's gaps, real liquidity voids. Okay. So the way you clean this up, first and foremost, is first look at it. What do you see here? Let me zoom in here. And this is beneficial even if you don't trade stocks, okay? Because there's going to be times when you're looking at price action that it can get spotty. If you're a commodity trader, you'll see a lot of this, okay? And I'm going to show you the easy, simple fix. Very, very simple, and it gives you clarity, okay? But here's the daily chart, and it's extremely, very spotty. Can you imagine being up here? You went long here, and you're holding up here thinking, wonderful, man, this is so good. Thank you, Zuckerberg. What? What? What just happened? That's a haircut. That's a haircut, okay? Now, what do you think happened here? I mean, looking at all this stuff here, I mean, wow, that's problematic, isn't it? Like, who could have known that was going to happen? I mean, what can we do? What can one do? Well, you're on a daily chart, number one, so you're gonna have to come up. So what would that be? You can do a 2-day chart, a 3-day chart, or you can just jump to the classic 1 week or weekly chart. So you can go to weekly chart and boom. Now watch the magic. Why? Now, for the folks that are brand new watching me doing this for the first time, yes, yes, I'm outlining it in hindsight. I don't trade stocks, but I do this all the time with NASDAQ. I do it all the time. And I did it for years in the presence of thousands and thousands and thousands and thousands of witnesses that were paying me. And if I wasn't doing it live, they would have crucified me. Okay. I've earned the right to be able to talk like this. I'm teaching you how to do it so that way you can do it. I can do this. I don't need to do this stuff. Old high, that's buy side liquidity. Okay. So it rallies above that. When it makes this run higher, see that right there? Volume imbalance. Look how much cleaner price action gets, and it becomes far more predictable than using that daily chart. Why anybody's trading stocks using a daily chart right now is beyond me. Okay. The volatility is off the chain. It's been like that for a while. So you have to have a perspective that's linked to a higher time frame chart. This is where smart money is operating. They're not using daily charts. Look at that daily chart before we went to this time frame. It was a heart attack. You don't know where you're at next. It's opening and closing and opening and closing. Way huge, hundreds of points difference. If you're holding 5,000 shares of Meta, I mean, maybe not some of you doing that, but there's people that are doing that. You know, and you're holding overnight, and you're getting a haircut of 100 points. Wow, like wow, you're getting crushed. But now suddenly, when you see this volume imbalance, same premise. Okay, watch what happens. What we just described when using the volume imbalances on price action. I'm just trying to thicken it up so you guys can see. The volume imbalance, you want to carry these through price action. Sell side deliveries offered. What is it now short on? It's inefficient in what? Buy side delivery. That means price moving back up through this imbalance. So this area here that's highlighted It's missing both buy side and sell side. Even though that wick is there, there's no bodies in between the opening and closing of that candlestick right there. So by having it extended through, you can see sell side is offered there. But now what is it missing? Buy side delivery. It happens here. The candlesticks are laid over top of that. See that? And then now we leave it, we close below it. Take your reference point right back to that layer right there. That's where it's going to trade up to. Smart money's going to go short there. Same thing I just described in the indices, same thing I described in the dollar index, same thing I described in the Forex market. It's the same thing, folks. It's the same logic. Each one of these instruments have an algorithm that is running with the same logic I'm teaching you. Period. If it didn't, it wouldn't work. I can't take you to a room or a place or a person and they're going to come and be interviewed and say, yes, what he's saying is here, here's the thing, here's the this. No, it's a simple observation of it's controlled. Now you can get upset about that because you've subscribed to the idea that it's buying and selling randomness, which makes no damn sense to me. Why anybody would ever risk money on something like that? That's like horse racing. How do you benefit from not knowing anything about the other horses? You just have a strong affinity for how well that horse was raised and that jockey won races before. So therefore, it must be a sure thing. Wrong. It doesn't have any basis on the future outcome of that race. So having the criteria that repeats in all instruments, that means it's algorithmic. It's looking for inefficiencies. It's looking for a balanced price range. That's what a volume imbalance becomes when it sells off and lays bodies over top of it. Now it's only what? A SIBI. Then it becomes a fully delivered buy side and sell side delivery when the candlesticks trade back above this range. So it's like that paint roller analogy. There's no paint in here because there's no bodies. The roller comes down across it. Both of these candlesticks bodies are now painting over top of that gap where no paint was when your partner painting the wall missed it. And you come behind him and say, well, I'm going to fix this area because he didn't do a good enough job. I can see some of the wall still. Paint down. And then now to make sure it's ample paint distributed to the wall is framed by these two price points, the candlestick's opening, that candlestick's close. The paint roller being applied to the upside now efficiently delivers the paint. So now this area is become a balanced price range. So if price can manage to get through it, it's going to be real hard to get back above it. And what do you see here? It opens, wicks through it, not through it entirely, but up to the high of it, right? No, it can't get to the actual high of it. And then went back down below that opening price. If you can get into it there, that's where you short. Stop above here. That's pretty painful. That's pretty painful. Why did it go down here? What is this? Watch. Volume imbalance. Now, what is it doing? It's providing what? Sell side delivery, not liquidity. Delivery is the action of applying candlesticks into a range that is inefficient. Sell side delivery is the movement of price action directional going lower and being printed in candlesticks that are moving continuously lower. Once you define an area like this volume imbalance, I don't want to do that. I want to stop it right there. That candlestick's close and that candlestick's opening. That's the inefficiency. As price is dropping down, it's doing what? It's delivering sell side delivery. Once it goes down to the low here and a body is dropped on that low, then if it trades back up, if it makes its way back below and leaves this low again here, this will act as a balanced price range. In other words, it's going to be very stiff, real resistance. Now, contrast that with supply and demand, or contrast that with classic support and resistance. That's not explained that way. That's not explained like that at all. That's why I'm trying to tell you when you listen to these people on the internet or you read them and they talk out their ass and say that I'm telling you something that's rebranded, that is not anywhere else. That's what I tell you to go out. If you find what I just explained in support and resistance, supply and demand, Elliott wave, Wyckoff, Gann, whatever, find it just like that in a book before 1996 or in a video documentation where I can find it in circulation because I got tons of stuff, folks. I got stuff that's been out of print for decades. I promise you, There is nothing before this. And if you could, it's $5 million, and I'll drive it to your house in a bank check in a diaper. You can videotape it and record it and put it on live stream when I do it. But it's a safe bet because it ain't never gonna happen. You can't find it. So again, for the piece of people that say, "Why do you even respond to these people?" Because AI is watching everything that I'm doing and what you're doing, and because I'm a public figure, the bad information that's being sowed out there is for that purpose. So that way, when you do ChatGPT, or if you go on to Reddit, or if you go on to Grok, the only information that those things get is when it goes out in the internet and does the same thing a Google search does. Google search. You think that I lived in a welfare development. You'd think I was broke and living behind a McDonald's if you believed everything these people said. But because they say it, because they put up stuff that ain't real, they twist facts. Having rental properties is not me living in houses like that. Okay. Big, big difference. Okay. Big difference. Long story short, this potentially could go lower, and I would like to see this be used as that same catalyst here. It obviously it would be better if it just kept on going lower. But if it goes below this area here and come back up, it needs to stay in the lower half. It can wick through it, the halfway point. Let me darken that up a little bit. And there you go. So if it trades below this rectangle area, okay. Big shout out to the guy on YouTube trying to sell his mentorship, but it's really my stuff. We trade boxes. No, it's a fair value gap. That's what it is. Okay. But when you trade below it, come back up, it needs to only keep the bodies in this portion, the lower half. It can wick up in here, but the bodies need to stay in here. And as long as it does that, and that's again assuming that we close below this area. Any new candles that form, if it trades back up in here, I'm not going to freak out. I would expect it to do that and then reach lower. And there's sell side here, here, and here. So, you know, worst case scenario, this thing could trade down into the 400s. But that's assuming a whole lot. I don't have any skin in the race. I'm not short. I don't have put options. I don't trade stocks. I'm not touching them. I'm just giving you an application of how what I do in Forex, what I do in index futures and commodities, currency trading, bond trading, everything is actionable on every instrument, every instrument. And I gave you examples with Bitcoin simply because I'm pressured by my long-term students, and I don't want to be disrespectful to them because they've been very patient in asking long-winded rants about everything else, and them saying you don't ever answer our questions when it comes to this. So I did it. Okay, so please leave me alone for a little while. Give me some time. Okay, but I don't want to subscribe so far with the things that I teach as it relates to crypto. I've never traded it. I've never made any money with the crypto market. So I can't stand behind my word with that, but I have made money with everything else. So I want you to know that there's a difference between when I say something, I can stand on it because I've made money doing it. If I don't make money with something and I've never traded it, why would you care about my opinion? Can we agree about that for a second? Just be honest, okay? If I've never made money trading an instrument, why would you care about my opinion about it? I haven't validated my opinion. Because if my opinion held weight about that instrument with my own faith and money being risked on it, then I would have what? I would bring forth receipts. I would be trading it. I would be giving you examples. And here you go. I've done this and done that. But because I've never done it, that's why I stay away from it, folks. That's why. Can you appreciate that honesty? Can you at least give me that? That's all I want you to understand. I've never traded in it, and I don't ever want to trade in it. Okay. So that's why I don't touch it. I believe it's going to be used as a something that's painful for people, and I don't want to go into a Bible study here, but that's exactly why I don't want to touch it. Okay. Could I have made a lot of money trading it? Yes. In 2013, I could have bought it in the hundreds. I could have done all that stuff. I could have bought it when it was down at 3,000. I could have done it at 6,000. I could have done it when it was 20,000. I told you when it was going to go to 20,000 for real. I told you when it wasn't going to go to 20,000, and it tanked down to 3,000. Go back in time. You see all these people saying, you said it went to 3,000, you were going to delete your channel. Because I want all of you crypto people that are fanatics to leave me alone about it. I'm not going to spend time looking at crypto markets because I don't have any vested interest in it. And I don't want to inflate the interest in other people because I don't have faith in it. Do you understand? Like, that's the real issue here. I'm afraid it's gonna be used to hurt people, and I don't wanna have any affinity placed on it to where you look at me as an influencer and say, "He enticed me to do this, and I lost money." I don't want that. I don't want that. If I don't see any reason for me to get into it for my own money, I sure as hell am not gonna try to talk about it and inspire people that just take everything I say just because I said it, they believe it's the truth. When I'm telling you, don't believe anything I'm saying. Go into the market and see if what I'm teaching holds water. If it doesn't, then you've exposed me and then move on. Find somebody that does a better job than I do. How hard is that? That's what I would be doing. That's all I ask you to do. Okay. You'll get your own evidence if you look for it. But if you take your opinions from other people and you think that you're informed or you're, I didn't never get scammed by that ICT guy watching his free videos. Woo, you really saved yourself, didn't you? Unless you've done the work and studied it yourself, you don't know. You're taking the opinion of a nobody that you never met before, and you're borrowing their logic, which is what retail does. Think about it. Retail looks at things that have absolutely nothing to do with price action, not one thing, but they subscribe a religion to it. That's what it is. It's a religion. Retail is the real cult. Look how crazy they are when I come out and tell them their stuff is garbage, and they come at me all the time, and I'm still here. I make fun of them, I laugh with them. "Oh, man, great." Whatever. But they're ready to murder me. They wanna come by my house. They wanna do this, and, "Well, if I ever catch you in the streets," man, you don't wanna catch me in the streets. Trust me, you're gonna catch these hands, and you don't want them. Point is this, keep your emotions out of this, because if what you were doing was making you real money, you wouldn't care what anybody says. Because I don't care what anybody says about my stuff. And my stuff is the best. It rules. It reigns. There is nothing better than it. Nobody's came forward and beat it. No one's ever done anything better. No one's more precise, and they can't come close. And that's the confidence. It sounds like arrogance. It sounds like it's narcissistic, but that's because you're on a lower plane of understanding and you're looking at someone talking from a perspective that's way higher than yours. And it doesn't mean I'm smarter than you. It doesn't mean I'm better than you. It's just that I'm subscribed to a view that the markets are really, really rigged. And I look at it through that lens, and I'm not falling victim to the same things that retail traders do, whether it's volume profile, footprint, level two data, supply and demand, Wyckoff, Elliott wave, Gann, Fibonacci on the basis of how Fibonacci is used. I only use it for basing a quadrant in an equilibrium. That's it. That's it. That's all I'm using it for teaching purposes. So that way you as a student can find your entry technique with that given level, not some random zone. I don't deal in zones. Okay. It's very specific levels. And I hopefully communicated that with you here. And I guess you'll let me know on X and in the comments in the video whether or not you learned anything from us today. I've had fun with y'all. I had a wonderful time teaching you. And it's time for me to grab something to eat. And hopefully, did a good job with your time invested in me today. Until I talk to you next time, have a pleasant holiday season. And until I talk to you otherwise,